It's iPhone units. It's really, is there upside there? That would indicate an ASP lift, more Pro models, and ultimately the demise of Apple, would really be false in terms of what the narrative was this quarter. It's about that services. You're expecting a slight miss, but it ultimately needs to be in that sort of 19.3, 19.5 area.
Services, the big area for you, Alex?
Absolutely. I mean, you've seen these moves that seem desperate from Apple, raising the rates for Apple Music, squeezing Facebook on the Boost post inside, apps. So what does that signal? To me, that signals that the services are growing slowly.
See, instead of looking at me, I feel like you should be looking at Ives. With less than a minute to go, right? Because he's the uber bull, and you're questioning part of the bullish thesis. How do you respond to what he said?
And I think what Alex is talking about is really right now the big bull-bear debate in Apple, because services is a big part of the valuation. And if you start to see cracks and you don't see a reacceleration back to double-digit growth, that would definitely poke holes in the bull thesis. But I do believe, I respect Apple, in terms of everything they're doing on services, respect your opinion, but I just believe that Cook, again, will be Teflon-like as we come through.
We're looking at 8% growth for the services business. Again, these are behemoth businesses. One of the reasons why you're willing to pay what Stephanie Link says is a premium valuation is because of all of that. Yes, iPhone still accounts for half of revenues, but it's very much a services story, too. Let's go to Steve Kovac now, who has those results. Apple earnings are out.
Hey there, Scott. They are indeed. So we got a beat here on the top and bottom lines, but some misses within individual segments. Let me break it down for you. Revenue coming in at $90.15 billion versus the $88.9 billion expected. That's a slight miss. EPS, that's a beat, rather. EPS also a beat, $1.29 versus $1.27 expected. Now for those misses within the individual segments. iPhone revenue coming in light, $42.63 billion versus the $43.21 billion expected. Still up 10% year on year. Services miss, by the way, is another miss, by the way. $19.19 billion versus $20.1 billion expected. Scott, I'll have more for you in a bit, but that's the numbers to chew on for right now. Looks like shares are down 4%.
Yeah, we'll chew on it, too. Thank you, Steve. You come back on in just a moment. Ives, initial reaction, iPhone number light, services number light.
But better than feared. I mean, if you look at what the worries were, is that you were going to have potentially a $1-2 billion iPhone miss. Services, as Alex was talking about, that you're going to see a lot of softness. If you look at these numbers, just given what happened on the Plus, it shows that the Pro mix is probably about 80%. And I think as the Street digests this, I think it's ultimately going to be a positive data point in a dark market.
You talk about the Pro being significant. It's a higher ASP for the Pro, right? And that matters, the average selling price, correct?
That ultimately was the hero this quarter, because you're seeing more of that ASP come through, especially in China, despite what we saw with the Plus and some sort of choppiness in Europe. And I think that's ultimately what really stabilized iPhone revenues this quarter.
But see, at some point, we can't look at a stock decline of some 5%, a miss on the critical iPhone, which again is half the revenue, a miss on services, say, well, it's just better than feared, and not address the fact that it still is a miss, and maybe the company is not going to be able to grow to the degree it was because of the uncertain environment that we find ourselves in.
And then it comes down to what's baked. It's a great point. What's baked into the stock here, and what's the install base look like? I mean, right now, you have about 25-30% of the install base that has not upgraded their phone in roughly 4 years. They have that unique install base going into the holiday season. You have the China thesis. So I just believe relative to others in big tech, they will be a more formidable model that could ultimately penetrate that install base. And that's the key. And we got to hear what Cook says about the December quarter. That's going to be the key.
In fact, let's do it now, because Steve Kovac had a conversation with Apple CEO Tim Cook. He joins us once again. Steve?
Yeah, I did. And in fact, I talked to Tim Cook about those demand issues Dan was just talking about between the 14 Pro and the regular 14. So here's what he told me about iPhone demand, specifically among the pros. He said, quote, "We're constrained right now on the 14 Pro and Pro Max, and have been from day we launched. And so obviously we're chasing supply there and trying to get as much supply as we can to solve the demand." So as we've been hearing, Scott, for a while now, iPhone 14 Pro, they are just constrained on that while the regular 14 is just fine. And to Dan's point earlier, that does help with the ASPs. Keep in mind, though, guys, this quarter is only 8 days of iPhone 14 sales, so we got a lot more coming through the holiday quarter. I also want to talk a little bit about how Apple was still able to beat on the top and bottom lines here, despite some of those misses within the segments. I asked Tim Cook about that as well, and how he's cutting costs. Here's what he told me, quote, "We are hiring deliberately, and so we've slowed the pace of hiring, and we're going after cuts and our savings into commodities." So slowing hiring, Scott, and savings into commodities, that means things like memory chips are getting cheaper for Apple as demand for smartphones and PCs goes down across the board.